Wall Street Week with Louis Rukeyser is made possible by the financial support of viewers like you. By The Travelers, insurance and related financial services, working to provide financial peace of mind for American business. By Enron, providing natural gas which holds the promise for a cleaner world and a more energy-independent America. Enron Corp. And the Enron Foundation. And by Prudential Bache Securities, the investment firm with rock-solid resources and market-wise thinking in the business of making money. Produced Friday, April 20. Our panelists are Melissa Brown, Louis Holland, and Martin Zweig. Tonight's special guest is Mariola Haggar, Vice President, Prescott, Ball and Turben, Incorporated.
Good evening, I'm Louis Rukeyser. This is Wall Street Week. Welcome back. Well, this was the week that was, for many Americans, in the immortal words of Yogi Berra, like deja vu all over again. And they didn't much like it. Problems that were supposed to have been consigned to the ash can suddenly reappeared, as odoriferous as ever. There was, for example, the Cold War, whose demise has been announced by the establishment media more often than George Steinbrenner has changed managers. They know the Cold War is over. It's just that the Cold War itself apparently reads another news magazine. Because here was Mikhail Gorbachev, that renowned candidate for peacenik of the century, acting in Little Lithuania, very much like his predecessors had acted when they were able to, in Hungary and Czechoslovakia. And here, as usual, were many Westerners who wanted Gorbachev actually to be the Gorbachev they've been claiming he was, temporizing in the face of the heroic rise of a plucky nation whose capture in a Nazi communist deal we had never acknowledged, and saying in effect that Lithuania was just a small country, far from here, of which we know little. Which, of course, is exactly what Neville Chamberlain said when Hitler stole Czechoslovakia. At week's end, with obvious reluctance because of its geopolitical inconvenience, at a time when the president is riding high in the polls, a White House spokesman finally said that President Bush was increasingly concerned by the brutal and all too familiar Soviet crackdown. Just as the world news brought us malaise when we wanted miracles, so here at home we had to deal with another word we wanted to forget: deficit. The federal budget deficit, while still horrendous, had been coming down fairly steadily, not just as a percentage of the economy, but in actual dollar terms. Today, however, came the news that the red ink had suddenly spelled out a red alert. The budget deficit last month soared to $53.3 billion, the worst monthly report in the history of the nation. To be sure, it wasn't quite as scary as it first looked. There were some special circumstances, an extra military pay date, a big hit in thrift bailout spending, higher early tax refunds, but it was unmistakably the biggest monthly deficit ever by almost $14 billion, and at least a temporary reversal in what had been a clear two-year trend toward ever higher government revenues. And all that was enough to bring back still another unwanted experience of the past: higher interest rates. 6 months ago, it was hard to find an economist who wasn't predicting lower rates. Since when, perhaps not surprisingly, perhaps precisely the opposite has been occurring. This week was the worst, a full 3-point drop in the bond market, the biggest in years, with the 30-year U.S. Treasury bond now yielding 8.93%, its highest in nearly a year. Many believe, looking at softer wholesale prices and at continued weakness in car sales and housing starts, that rates would still be lower later in the year. But that was maybe, and this was now. And so stocks tumbled in their weakest week since February. It was deja vu all over again. Lest you think that there is no such thing as progress in human affairs, though, we turn tonight to an area whose advances will truly affect every one of us, where we live: healthcare, as we examine where we stand in the battle to extend and improve life. But first, let's study one of the diseases and see what actually did happen this past week in Wall Street. The Dow Jones Industrial Average peaked on Tuesday within 45 points of a new all-time high, and then shifted sharply into reverse, ending the week with a net loss of more than 55 points at 2695.95. The broader market indexes, which had failed notably to keep up with the Dow when it was rising, went downhill even faster, frightened in part by 11 straight losing days in the bond futures market. There's been another defection among our L's. Chief Elf Ralph Alcampora shifting from bullish to neutral, dropping the net count to a bearish -3. At the end of a week that saw the dollar gain against all major currencies except the yen, and precious metals barely budge, there were two other big losers today. Michael Milken, who is now expected to plead guilty next week to 6 felony counts and to pay fines and restitution totaling $600 million, and Pete Rose, who did plead guilty to 2 counts of tax evasion. It was also the week when we said goodbye to Greta Garbo, left alone at last, and in which a poll revealed that an overwhelming majority of Americans would rather have dinner with George Bush than Mikhail Gorbachev. Maybe they don't like broccoli either. Martin Zweig, what's it going to take to change the diet on Wall Street?
Well, there's a lot of problems. One, as you pointed out, is a bond market. I don't think the market's going to do very well unless rates come down.
You always tell me that you can't predict rates. What's your
right.
feeling for that,
I
Martin?
still can't predict rates, but I do like broccoli.
Well, that puts you one up on George.
Yes,
anyhow.
that's true.
What do you, is that the overhanging problem, or is there something that we've missed here?
What's part of the problem? I think that the bonds have gone up in yield partly because of competitive rates abroad. Japan, Germany, and so on, their bond markets haven't done well. I also think that all this refunding, partly because of the deficit you pointed out and the savings and loan mess, the government has to do a lot of selling of bonds, and that puts more pressure on. I do think the economy is relatively weak, and in the long run, that should be a plus for bonds. I don't think the bond market's going to collapse by any means.
Is the bond market disagreeing with you about the economy? Is it saying that the economy is stronger than we've been saying?
Yes, but there's more to the bond market than just the economy. I think that the lack of, well, first of all, the economy has picked up a little bit in the last month or two. I don't think it's for real. I think the economy is going to get softer, but I don't know if the bond market agrees with me.
If the economy gets softer and rates do come down, but in a softer economy, is that good or bad for stocks?
It's okay for stocks if it's a soft landing in the economy. In other words, just a little bit of weakness in the economy. If we go into a recession, I'd be willing to bet the stock market would go down pretty good.
You're essentially neutral for the moment, is that right? Or you're
I'm essentially neutral, but I'm getting in the lower end of neutral right now. And I almost changed my vote this week to negative, but I didn't. There's still a lot of pessimism out there. That's why I'm staying neutral right now.
Lou Holland, what do you make of these events?
Well, I think we're in a bear market. I think the probability is that maybe 75% that we're in a bear market. As a matter of fact, I kind of compare this to 1973, when we had a two-tier market where, in fact, you had the one decision stocks doing very, very well and most stocks not doing particularly well. And that's generally the case now in this market because for the last, really since August, most stocks have not done well. So I think the breadth has been poor, momentum's poor in a rising interest rate environment. And I think the recent activity by the bank regulators and also the credit agencies, as viewed by the possibility of downgrading Citicorp today, I think will further restrict credit and will probably slow the economy down somewhat more.
We should explain that they've placed Citicorp on a credit watch with an eye to possibly making it pay a little more for its borrowings.
Right.
Well, are you selling your stocks?
No, I'm not selling them. I guess I'd like to buy some more bonds, but I think it's possible that they'll go a little bit higher before I do.
The rates will go higher.
Yes.
The bonds will go lower.
Bonds will go lower, rates will go higher, right.
You think we're getting to the point where you might buy some bonds?
I think over 9%, I think you can start pecking away, because I do think the economy is going to continue to slow.
Melissa Brown, you want to peck at these fellows?
Well, I'm in agreement. I see the biggest problem as being the spread between what I would consider a fair PE for stocks to be selling at and the actual price-earnings ratio that they are currently selling at.
You think it's too rich still?
I think it's very much too rich.
How much would the market have to come down to attract you?
Probably about 15% or so.
Do you agree with Lou that we are definitely in a bear market, or probably in a bear market?
I think we're probably in a bear market.
What would it take to convince you that we were or were not?
Probably time would be the biggest factor. But I'm also looking very closely at first quarter earnings and to see if we're in a profits recession, even if we're not in an economic recession.
What's your advice to people at this point?
My favorite investment right now is cash.
Does that mean money market funds, treasury bills, what sort of thing?
Money market funds, treasury bills, right? Either or, something safe.
So you're not positively sure? Because if you were positively sure, you'd be selling stock short and buying puts and making money that way.
Well, that's always a risky prospect.
You think it's a time to run for cover, though?
I would be very cautious at this point.
All righty. Well, this is the point in the program when we usually pause for a round of viewer questions, but our topic tonight, the crusade to prolong life, suggests so many questions itself that we're going to devote a little extra time to trying to answer them. But we'll soon be back to questions about your financial health. So take 2 aspirins and write your money questions to us in the morning at Wall Street Week, Owings Mills, Maryland, 21117. That's Wall Street Week, Owings Mills, Maryland, 21117. Now, before we meet tonight's special guest, let's take one of our periodic looks at how much progress we're making in finding cures for the major threats to our health. As we say again to the nation's drug industry, it's time for a checkup. No disease has had so much frightening coverage lately as AIDS. The best that can be offered now is temporary relief. AZT from Burroughs Wellcome and DDI from Bristol Myers Squibb have prolonged life slightly, but there have been some worrisome side effects. My guest believes that the best prospects now are with the next generation of biotechnology companies, which are experimenting with new formulas to solve the problem. What American these days never thinks about cholesterol? There, the prognosis is improving for the 40 million Americans whose cholesterol is dangerously high. Merck with Mevacor and Zocor, and Bristol Myers Squibb with Pravachol have shown promising results in reducing cholesterol. Diabetes? Many drugs are now being tested in hope of preventing the most severe effects, such as blindness, but my guest says success is still proving elusive. Hypertension? Merck's Vasotec and Squibb's Capitan dominate the market and have helped provide relief both before and after heart attacks. No such good news yet on Alzheimer's disease, where the research for a truly effective drug continues. Similarly, no effective drug yet exists to prevent strokes, though Centex's Ticlid is in use to guard against secondary attacks. How about that standby of daytime television talk shows, obesity? My guest says that Lilly's Prozac, which is primarily used against depression, has proved effective in promoting weight loss, too. The search for a cure to arthritis continues. A number of companies, including Pfizer, Syntex, Ciba-Geigy, Lilly, and Upjohn, have drugs that provide relief for some symptoms. The ultimate answer, my guest believes, may come from biotechnology. That's the long-term hope for cancer, too. Already, drugs can prolong life where many cancers exist, and products from Bristol Myers Squibb are reported to be producing 90% success rates for some forms of Hodgkin's disease and leukemia. There's new hope for victims of paralysis. Upjohn's revolutionary group of drugs, Lazaroids, is said to prevent tissue damage after trauma and is expected to be on the market within the next 3 years. About 30% of men over 50 suffer from enlarged prostate. Merck has a new drug, Proscar, that shrinks the gland. It, too, is expected to be available within the next 2 to 3 years. A few years ago, Upjohn's Rogaine was touted as a cure for baldness. My guest's hairy conclusion is that the drug is not as effective as once was hoped. And if all this talk about disease has given you an ulcer, know that SmithKline Beckman's Tagamet, Glaxo's Zantac, and Merck's Pepcid are providing bright new hope for ulcer victims. Is the day coming when we're all going to live forever? And if so, how can we make the money to support ourselves for the second 100 years? For some thoughts on that, let's go over now and meet tonight's special guest, Mariola Haggar. Mariola,